Kia ora, good morning, good Monday morning. I am Mike from Markets. This is Kiwibank Markets in a minute, or the Kiwibank update on the impact of COVID-19 on the financial markets. In a minute. Yeah. Okay, so in that vein, a couple of the bigger Corona weekend headlines. The nation of Italy effectively put a quarter of its population on quarantine and closed a good chunk of the northern part, the up there part. Interestingly, that closure didn't extend to the Italian stock exchange, so it's a tough Monday ahead for those brave brokers, I guess. What else? Total infections. They have surpassed 100,000, and China's exports across January and February, they plummeted. Unsurprisingly, really. And those headlines were, they were after the Friday night close, Saturday morning close. So winding the clock back to Friday night, we had US employment data, non-farm payrolls for February. Stonkingly good is the moral of the story. 270-something thousand US jobs were created last month. Best result in almost 2 years, and the unemployment rate dipped back to 3.5%. So if you're looking for a conclusion to draw from that, yeah, the US was on a pretty good employment wicket ahead of facing the paces and seamers onslaught of coronavirus. I don't know where that cricket talk came from. Anyway, US data was good, but the markets weren't really super focused on the rearview mirror. They were looking through the windshield. And things aren't looking rosy ahead. Global equities fell on Friday by between 1% and 4%, depending on your preferred equity index. Oil dropped by 10% on a supply-demand double whammy. There is a bigger story there. We'll see how we go for time. And the US dollar, that was pummeled. US treasuries, they traded to new all-time lows. Again, basically negativity. Bucking that negativity trend, though, was the New Zealand dollar. Yeah, the bird rallied from a Friday arbo low of 62.94 US cents, 62.94 US cents, up to the upper end of the 63s, and continued to hold in the mid-63s into the close. Yeah. So, where to today for markets? Headline dependent, of course. But, today from a local perspective at least, it may be a tug of war between Corona headlines and fiscal response headlines. The Prime Minister and the Minister of Finance are expected to make announcements today, maybe, I think, on their plans for steering the economy through the Corona-troubled waters. Lots of metaphors this morning. Most of them mixed, yeah. How's my timekeeping? Right, okay, oil, short and sweet. OPEC supply restrictions, they were due to roll off in March. No agreement on new production curbs, so Saudi Arabia threw their toys and ramped up production, or threatening to ramp up production. Looking to cut deals with buyers, all of that sort of stuff. So supply is potentially going to ramp up at a point where demand is absolutely capitulating. Yeah, you don't need school set economics to know that's probably going to weigh on prices. Which, a good and a bad thing. Yeah. Okay, that's more than enough from me. I'm running well over time. Have a happy Monday. Ka kite anō.